It's all red, with the exception of the Shanghai Composite. What's going on?
Well, the Chinese market never moves in direct correlation with any of the markets. There must be a big IPO there this morning. No, in fairness, it's anxieties over the Eurozone and the growth and the tough austerity measures that are coming. You know, because this is against a backdrop of economies that have been struggling. Although their last GDP reads at the middle of last week gave people perhaps an inkling of hope that perhaps the growth is going to be a little bit better than expected. But you know, people discount the size of the Eurozone economy. It's bigger than the US economy, you know, so you've got these collective economies that are large in size, but are seemingly going to stumble along for the next 5 years.
But it just seems like the market's response is so ambiguous. At the beginning of last year, it was no longer jittery markets, it was more optimistic markets following the announcement of the bailout and the safety net for other European markets besides Greece, so Spain, Portugal, Italy. And there seemed to be a positive response, and the euro recovered from 14-month lows, and now the euro is being pummeled all over again.
The euro is actually at levels last seen in 2006. I think, you know, it's threatening 120. I think it was 122.5 in midday trade in Tokyo. So I think the anxieties are causing people to sell off indiscriminately, but it has a huge effect. Ironically, it might make the exports slightly better to places such as the US and China, as you can imagine, you know, with a much weaker currency. So I think, yeah, ultimately in the short term, it's probably going to be more euro selling, more anxieties about. But this is not new, Lerato. I mean, these concerns about the pig surfaced last year in September.
Okay, what is it that everybody's concerned about, that the austerity measures will not lead to sufficient growth and recovery within some of those smaller European economies? Why not?
Look, yeah, because as you point out, I mean, they make up a very small part other than Spain, because Spain is a big economy. Spain's the world's 9th biggest economy. And Italy is one of the top 10 economies. I think it's the world's 7th biggest economy. And then, of course, ahead of them in the Eurozone, you've got France and Germany. I think the anxieties came about because Greece is actually due a debt payment this week. I think it's on the 19th, 2 days after my daughter's birthday, which is today.
Happy birthday.
Happy birthday.
All right, so the bond matures.
I think those where the anxieties actually arose is when Greece, on a month-by-month, a week-by-week basis, was failing to meet its obligations. So suddenly the anxieties were heightened, and it was, hey, they might not actually be able to meet these specific deadlines, and this is what's looming this year, because collectively, the pigs have 404 billion euros, which they have to either refinance or...
This is leading to some sort of a political fallout, and not internally, as we saw in Germany. We're now talking amongst the leadership of the European Union. The Germans, although cautious, have opted for some kind of a measured bailout of Greece. I don't know what their approach is to the other countries. And the French are taking a lot more of a hawkish position. What's going on?
Yeah, interestingly, remember the Germans had that midterm election that was looming. That couldn't have happened at a worse time for Angela Merkel's coalition, because she lost a bit of political ground there.
Within Germany.
Within Germany, absolutely, because of her position taken towards Greece. Because if you look at the Eurozone, Germany, the biggest economy, is also the most fiscally sound. Have always run their affairs. You know, there's that old saying about German efficiency. They apply that to their fiscal stance too. So for me, obviously there are going to be political backlashes, but it's important to remember that Greece's current government was only elected in October last year. So the changes that were kind of looming had already happened, and you're seeing many governments in Europe a change of guard. So I don't know how you would see, because France obviously want to see the Eurozone work and work well, whereas Germany seem a little bit kind of somewhere in the middle and maybe fence-sitting at this time. They all realize that a common currency is something that...
Could this whole thing implode, because European media is suggesting that Nicolas Sarkozy is saying, if this doesn't work for Greece, if all efforts are not put in place to save the Greek economy and the smaller economies, France will pull out.
We're leaving. Yeah, exactly. You know, which seems a little bit extreme. But to put this in a historical context, the European Union has survived much worse historical events. I mean, if you think of World War I and World War II.
But it didn't exist at World War I.
It didn't, but it existed post World War II. Although they've always been fairly free trade across Europe through the centuries, simply because of their proximity to each other, and they're not geographically surrounded by mountains such as Switzerland is, and that's probably one of the reasons why they're excluded.
Okay, the rand tracks the euro quite strongly. What does this mean for this local economy?
Obviously, it's a big trading partner of ourselves, as well as many other African countries, because of their historical connection to Europe. So obviously, a slowing European economy doesn't bode really well for that kind of portion. Luckily for the South African economy, the Chinese have become a far bigger trading partner of ours over the last decade.
Let's talk about oil trading lower this morning, also within the context of the oil spill off the Gulf of Mexico and BP's inability, really, it seems, to just plug that gap. But I think they've finally got some sort of a grip on it this morning. And it's raising a lot of issues about what we're going to see in terms of oil production, environmental standards, refining capacity, and the recovery of the global economy as a whole, which is reflected in the oil price.
Yeah, it's just another reminder of how difficult it is actually to get the oil out the ground. And once you've sprung a leak like this, to be able to contain it. Because in the broader picture, we use 85 million barrels of oil a day, of which the US is somewhere near 20. And coincidentally, that hasn't fallen over the last 30 years or so. Whereas in the Asian economies, their demand has ramped up significantly.
Yeah.
So that's the underpin for the price, right? But I'm reminded that to go 1.5 kilometers below the surface of the sea, where it's 3-4 degrees centigrade, to try and collect the substance, people shouldn't expect anything other than a high price.
I mean, a big economy like the United States, all their problems withstanding, refines about 30% of its oil needs. An economy like South Africa, the biggest in sub-Saharan Africa, also imports a significant proportion of its domestic needs. Africa has many oil producers, but many of them don't have the refining capacity. So as we talk about global recovery and what you're able to bring to the consumer at market, there's some challenges lying ahead.
It's very expensive to build a refinery. In fact, there's no significant refining capabilities that have been built in the US since the mid to early 70s. And that's just a reminder that it's a 30-year project. And in this day and age where we're talking about substitution and perhaps oil running out, even in our lifetime, people are reluctant to invest that amount of money in a industry which seemingly is in sunset mode, even if it is 2-3 in the afternoon. We're going to see the end of oil at some stage. And so people are unable to contribute or commit large sums of capital specifically to refining capability. But you're right, it's nuts that countries like Angola don't have any refining capability whatsoever, but yet they're sitting with these massive reserves.